Alright guys, I'm back. Sorry, I wish they have this in a better, it goes over here, but man, sorry, kind of small to see. Let me do this real quick so you can see that. Alright, okay, well, this is the best I could do, but there you go, probably a little bit better. Alright, welcome you guys, live again. I feel like this is a better format than, doing it the other way. Now, I will still make short video here and there, but I feel like this is going to give me a little bit more practice of kind of like free-flowing form. Yes, I tend to babble off topic, but it just helps save me time to, sometimes I have to edit my video and all that stuff, and it's just a hassle. So forgive me if I go live way too often, but you guys could watch it later if you would love to do that. But let me wait a couple more minutes for you guys and let me set this up. So this is a goodness. See what I mean? Interruption. Okay, so let me so we have this one right here set up. I was going to show you the chart here, of course, S&P 500, and then I want to show you AMC, obviously, because it's very to the moon. No, kidding. I don't know. Look, it could run, and this is my price point right here, and I think they're going to try to smack it down right here. And also, if you, again, I'm not a technical analysis person here, but this is another resistance, right? So you do dotted right here. Probably better. Usually I draw this kind of ahead of time to kind of, again, I don't trade this at all. Currently I have a put contract, and I might go long on this one for a short period of time. Just, a small portion of my portfolio. I'm not going to go all in, but my thought is that they're going to try to run it along with fourth quarter for GME. And it's always my thought, right? And of course, Moran's did a video kind of showing you that too, like months ago, probably a couple years ago. No, month. But if you watch his video, it kind of makes sense that they're gonna try to, drive the traffic from GME to AMC, thinking that, let's just capture the run for a little bit, even though you might not be able to, because it's almost oftentimes it's too late for the game. I mean, for you to, the minute you jump in, they're gonna smack it back down, right? And that's how they got you. Not a financial advice, obviously. This is just a learning experience that I have in being in this stock, being in this market for 3 years, I would say, as a trader though. But again, I get burned. Well, let me tell you what the background that I have now. I used to work and then happened to, I wouldn't say burned out at work, because that's not it. It's more like, oh man, like I don't want to do this anymore at the moment, right? And then at that time I was actually doing trading I went into Bitcoin, Dogecoin. Remember when Elon Musk tweeted about Dogecoin? Dogecoin went up berserk. I sold way too early, but I did capture some of the profit. So my background was trading crypto, right? The reason why I opened up Robinhood was because they were going to put crypto in there. And back in 2017, I got my experience, trading in crypto space. Up until this point, I didn't know what stock is and all that stuff. So I was learning as I go. Oh, okay. So my first stock that I ever bought was Ford. So if the car making industry, it was like, oh, hey, Ford, it's American company. Let's do it, right? So never ever know anything about the balance sheet, what it means to have, the stock price this much and this much. But little did I know, I didn't know what the correlation or the relationship between the stock price of a company versus the balance sheets of the company. So, and then, I've been in crypto for a while and did make a lot of money, a little bit, a lot for me, but I'm sure to most people, it's just like, a couple bucks here and there. But I did make kind of enough that I feel like, oh, what if I do this full time, right? So that was the origin of it. And at this time I was working and, have full-time job and stuff like that. But then, family emergency happened and I decided to take 1 year off and give myself a year using the money that I make from crypto to try to do a day trading, right? And I was successful for, I would say, 6 months in. And of course, the whole AMC GME thing happened. And that's what kind of like gave me the idea. It's like, oh, hey, if I could capture this run, I would be set, right? Naive to think that, obviously. So I had to learn the hard way. And the reason why I told this whole story is the thing that comes up here. I bet you anything they're gonna try to capture people like me when I was kind of naive, thinking that I could capture this run. Okay, and the minute you jump in, it's almost often you might get addicted, and then when it runs up to here, you might be like, oh, it could break through, and you hold, and then guess what? They're gonna dump. See what I mean? And so I've experienced that many times. Now again, I'm not an expert. People who claim to be an expert is going to tell you, oh, that's because you don't know how to do technical analysis. And oh, that's because you have to join so-and-so course, right? And so yeah, I lost some money, now not enough to break my back or anything like that. I was smart enough to kind of like part, my winning from crypto and Dogecoin, Bitcoin, Ethereum, and all that stuff to, my retirement, 401k. So those basket are the long term. So my thought process was like, okay, I need to have a long term portfolio. I need to have a medium term portfolio that I could kind of like swing trade. If I buy it this month, I could sell it next 2 months, or I could wait another year for me to kind of capture that growth within a year or so. My thought process is that if you could hold any asset for 1 year or more, you're gonna have the ability to not pay much tax, right? It's just the tax structure that we have as the U.S., right? And then I have my short term, which is my trading account. That's what I burned through. I'm not going to tell you how much because, again, the money is not relative. It's the fact that it put me back to work, right? And then, I was like, oh, hey, I need to go back to work to kind of build the nest egg again. And meantime, I still have my 401k. I still have my Roth IRA. I still have my kind kind of small account that I consider to be a medium term. So, hey, I'm slowly building it back up again, slowly. And this is why I love watching Moran's rants, because that's what he advocate, right? Now, again, like I've watched the Moran's rants for, I would say, over a year. Ever since the ape was introduced in AMC. That's how I got into, GameStop. But before that, though, I got into GameStop after I see the interview with Ryan Cohen on Chewy. Remember when it went IPO? CNBC kind of do the interview and kind of boast him up as a very, very smart guy, right? But now they all like crapping on him because he's in GameStop, right? It's kind of funny how things go. But again, these news media, I usually think that they are here to mislead you. They're not here to give you true information. They just want to give you enough information to make you think that they're telling you the truth. But typically they don't. Alright, okay, well, I don't know. I'm just going off tangent here, kind of waiting for people to join. If not, I'm going to make a short video here. I'll tell you in a minute, and the title of the video is the one that is the topic that I'm going to talk about. But hold on, let me... If not, I'm going to make a short video here. I'll tell you in a minute, and the title of the video is... Alright, so it looks like nobody's here, so I'm just going to make the video real quick, so... I'm going to talk about... Okay, give me a minute. If not, I'm going to click... Alright. Oops, I was like... Okay. Alright, let's make this video. Let's get to it. So I was watching Moran's rant, obviously, and I usually use the other one to look into GameStop. It's called Stock Analysis, and this is what I'm used to, but I love the macro turn. So thank you, Moran's rant, for kind of show the ropes here. Shout out to the guy. Okay, so, what am I looking at? Obviously, this is cash on hand, right? This is 2003. Keep in mind, this is 2 quarter of recording, okay? Not quite sure how fast this data comes along, But, man, anyway. So, if you look at the cash on hand, obviously, you see that? That's a lot, right? Increasing from year to year. And for some reason, people is calling this guy. What are they doing? What is he doing? Look, he doesn't do anything for the company, really. He got in at the end of this year, right here. At the end, not in the beginning, remember. November 16, that's when he wrote the letter to everybody in the board of directors to try to turn this company around, okay? And then he has influence throughout here. So he took cash on hand from $500 million to $600 million, to double that one from the previous year. And then now adding close to $100 million to the cash on hand, right? So in my book, that's pretty good, right? Now, if you think, because look, shareholder equity went down, like, well, he used it this year to do whatever, and then now he doesn't have to use it again. See that increase over $1 billion, $1 billion in asset, right? Decrease liability. Look at this. So he put more money into asset. At the same time, you decrease the liability. Do you hear me? Do you hear what I just said? So, and then also too, how is that like, oh man, but anyway. So, but how much is he decreased this by? $200 million. So he decreased 200 million, add $1 billion to the asset. Okay. That's insanity. Insanity. Okay. So, other long-term assets, not quite sure what these are. I don't believe that is the marketable security, because it's not showing the $300 million here. So it could be like buildings and all that stuff, right? Long-term investment. So it's not there right now. Comprehensive income deficit. This needs to be fixed, right? But hey, it still come out. So it's down. I wonder if this is like stock compensation. I have to look into this a little bit more. But what I want, let's get to this video. I'm dragging on way too long. So I was watching, I was looking at this particular, I don't know how to disable. Huh? Guy, what's the hell, man? Sorry. Well, that's annoying. Just ignore this. I don't know how to shut it off. You know what? Go away. There you go. Sorry. Alright. So what I was looking at is the balance sheets right here. Right? And you know how people always say, oh, not balance sheets. I think it was cash flow. Yes. Yes, so you know how people always say GameStop doesn't make money, right? And Moran's has been like killing it every time somebody comment on his video, and I love it so much. But anyway, so I was looking at this, right? Again, this is cash flow statement, all right? So we all know, if we're in this play, right, that we only post a loss of $2.8 million. My thought is that loss is actually not even a loss. Let me tell you why. Right here. You see this one? This is the marketable security. They spend, honestly, I think what Ryan Cohen or their leadership is trying to do is to use every penny to their advantage. And this is why they should have just put 40 and then have $3.8 million to put into, wherever, right? So spend $3.7 million left, they would have put a positive balance sheet on this. And honestly, I feel like the reason why they want it to be this way, it's like intentional. I feel like it's intentional because of taxes, right? If you don't make money, you don't have to pay taxes. And they're titrating it to the point where, okay, it's going to be a little bit of losses, but then you don't have to post a positive quarter in order for you to pay taxes on that. Now, they might want to do that because they want to get ready for quarter 4, because that's what the best quarter is used to be. I'm sorry. That is what the best quarter, that's where they make the most money for the company. Is it like 40? Yeah, 40% of their sale comes from quarter 4. And so that's amazing, right? And so, or 50%, right? Maybe they're trying to increase the dollar amount in terms of, okay, let's put everything, buy the best merchandise, be prepared for, what quarter 4 is going to be, or whether if it's going to be slow or whatever, they are going to use that money to their advantage. So that's what I just noticed is that, they didn't have to spend this much on the investment, but they do it on purpose in order to not having to pay tax, right? And if you don't have to pay tax, that's like $6 million less than, or $5 million less than you have to pay, right? And I don't know if they show the tax purpose here or not. So net cash flow is still in the negative. Again, this is going to be fixed soon. Yeah. And so, again, like, see this negative 2.7 here? It's due to financial activity. Okay. So, So what was that growth right here? Financial activity. When was that? Okay. 2001. Is that when they raised the equity? Yeah. Remember they sold at the top to raise $1.1 billion in cash? Yeah. And guess what? They still have that cash. So if you look at that particular year, so Q2 of last year, was that the year? Okay, let me double check real quick. Yeah, it has to be. So they sold some for this much and then sold some for this much. So that's around 1.6. Yeah, $1.6 billion from issuing share. Net positive. Hold on, let me. I don't know why it's not saying that. Issuing share, repurchasing share. So when you issue share, you get money. When you repurchasing share, you spend money. Okay, this is what I'm sorry, I'm just trying to orientate myself here. So I hope I make sense there. Let me see. See that? So if you look at that money right here, the amount. So $1.6 billion, okay? That's from them selling. Okay, and then if you look back to Q2, 2001, right here, this is how they got cash on hand to do whatever they need to do. And so they went from this to this, right? Cash on hand, and then they have total asset added from there, $1 billion. That makes sense. They use around $100 million to do whatever they need to do. Right, look at the liability, kind of stay the same. And then, and again, this is when Ryan Cohen already had the influence, and this is the second quarter for last year. Okay. And so to say that he had no hand in making this company better, it's, I don't know. I don't want to finish that sentence, but you see like cash on hand right here, less. And then Q2, they have more money to add to the book right here. Remember they sold 500 here and then $1.1 billion here. So technically they still have that money. See what I mean? So 1.7 right now. What do they have? And then of course they spend a whole bunch of money to do a better business, right? Whether to buy a warehouse or make NFT marketplace to be what it is today, right? They're still working on it, obviously, but it's a one-time payment type thing. They're not going to need to improve on the website until the regulator come back. But again, they could hire, people to do that immediately. They don't need to kind of wait and, they don't have to wait for long to hire people to want to work for them, right? Okay, so 1.7, if you look at it, okay, so this one, $300 million less, around let's say $200 million less, and then they burn around $600 million this quarter, and then $800 million the next quarter. But guess what? Since then, this year, they've been adding like crazy. So 100 million, down about 8 to 80 million. But what did they do that? I mean, what did they use that money to do? We all know this. Marketable security. So they add marketable security, I think around I think this year right here. They add $250 million to marketable security. And then ever since then, they have increased it by 50 million, as we see earlier. So technically, they still have $1.2 billion. Hold on, yes, right here. Oh, no, that's not it. Duh. Okay, so marketable security, if you look at right here, see? 200, close to 250 right there. And then if you add these two together, that's 250, okay? They took some out, remember, because they accrued an interest and they want to take some out. And now they put it back in, $40 million. So, I think that's why so all in all, they put around $52.2 million. So again, they have the option to show positive here. Really, But for some reason, people don't want to give them credit for that. Or they just didn't know. They just see the top line right here and they're like, oh my God. GME is losing money like crazy. And look, AMC is running like crazy, of course. Let's go there. Let's make quick money and then jump back into GME. Yeah, you might get lucky and do that, but I wouldn't. It's just my opinion. Again, I have my own experience to talk about that. I kind of share it earlier in the video here already. Okay. And then, of course, they have stock-based compensation. We have, and keep in mind too, Ryan Cohen is not taking any salary. Okay, 1 second. And so he wouldn't be, in this stock-based compensation. And this is what I love about this company too, is because they actually give their employee the ability to own stock to this company. And this is what it used to be, decades ago. And this is why back then, you have people retire at the age of 55, because they have, number one, if you work for a company for 10, 15, 20, 25 years, you have a pension fund from your work, from the company that you work for. So for example, if you work for Sony for 15, 20, 10 years or more, you're going to receive a paycheck from the company. And it's going to be a part of your retirement. And on top of that, you have Social Security. And then on top of that, you have your own 401k. So there are 3 ways for you to earn those income. right, as a retirees. That's why they were able to retire at age 55. Now, some people choose not to, obviously, They thought, okay, they have company pension fund and then they have Social Security. And some people don't even save enough in their 401k to retire, And that's fine because at least they have two other income. Now, you only have Social Security, right? Some company do pension fund, but it's only for the executive, right? The very tippy top people who are, they think that they are part of the elite and they deserve that for some reason, right? Even though, you have company that goes out of bankruptcy and blah, 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 blah. To me, this is why Ryan Cohen is the best one of all. Obviously, I love Ryan Cohen because, again, he's cut from a different cloth, okay, in my opinion, right? And he sees the atrocity of what these companies had done. For example, AMC, look at the executive. They don't even care, It's ridiculous. They don't, see how shareholder has been hurting like crazy, but then they cash out nonchalantly. And then at the same time, try to scold people from criticizing, the top leadership, saying, why are you selling the share? Say, oh, I'm just planning my, well, these executives are people too. It's like, bull. But then don't try to lure people into investing in your company, saying that you're trying to do the best you can when you can't do the best. The best you could do would be filing for bankruptcy, because then you don't deceive more people to think that you have a chance here. But anyway, yeah, let's go back to AMC. But anyway, before I go though, I hope everybody understand what I'm trying to say here. My thought on this is that they could have shown positive balance sheet, but they didn't do that on purpose. Number one, tax, right? When you show negative balance, you don't pay much tax because you don't make any money, obviously. Two, they use every single thing, every penny, every dollar, every $1 million at a time to make interest on security, marketable security, and that is treasury bond, right? And then number two, they do that, I'm sure of it, is to prepare for quarter four. Whatever it is, might be, the goods. Everything goes up in price, obviously, so they need the money in order to buy all of the equipment, buy all of the stuff that they have to sell for quarter four. And then we'll see the profit there. So, and then let me show you this ratio too that I kind of like. Oh, look. So, if you look at this ratio here, from quarter two of last year, and then you have quarter 3, 4, 1, 2. Okay, so this is quarter. What the heck? This is quarter 2? Oh my god. No, this is quarter 3. 3, 4. Oh my god. I am... Don't listen to me, okay? Don't listen to me. Okay, so this is quarter 2. Look at this. July, right? Quarter 2, 3, 4, 1, 2. There you go. So this is quarter 4 right here. This is the best quarter. But look at the ratio, right? This is a quick ratio, assets versus liability. Current ratio above 1. That's a good sign, right? We want current ratio to be above 1. That's good. current liability versus current asset. Okay, and so that's what these are. Okay. So if you look at from quarter 1, 2, 3, 4. Oops, sorry. From quarter 4. No, quarter 3, quarter 4, quarter 1, quarter 2. You see how it's increased in numbers? With the exception of quarter 1 right here. Right? My point is that they've been increasing in that value. Now hopefully we could go back to 2 to 1. That'll be great. But hey, I think they use that to earn more interest over time. Alright, so that's that. Before I let you go, I know this video is just okay for AMC lover out there. Alright, if you want to trade this, go ahead, trade them, but please be careful. For the newcomers out here who just got into this play, don't think that you're gonna just hold on to this thing, because again, look, when did he announce that he was selling 400? Let's look at it. Not 400, 40 million shares of AMC to raise money. So let's look at AMC real quick. Sorry, I should have set this up. So this is AMC. I want to a proxy vote. Asset depositor. Filing loans and previous securities. Not sure what that means. Hold on. Proxy material. I think I want 8K though. Forms. What's the 8K? Because I want to see how much they actually sold the thing for. I hope it's in the 8K. Information from me. 40 million share. So names in here. Alright, so this is August shares file. Entertainment group. Alright, sorry, bear with me a little bit here. No. I want to know 40 million shares. Oh, maybe it's in their website here. On demand discount. Why would I wanna? AMC. There's no investor relation. Crazy, crazy. Investor connect. Okay, so I want to see the filing. Corporate information, brand. Okay, well, how am I not? Maybe it's not 8K. Q4. When did they announce they were selling shares? AMC 4 million shares. Okay, there you go. That was easy. So if you just Google that. So apparently on December 14 or around there, they were announcing that they raised $300 million on this current share position right here. So $8.14 per share. So what I was originally going to show you is that these people who bought the 40 million shares from AMC already in profit right now. So if it goes to up here, so they are close to double their money already, right? But if it goes up here, they're triple their money. Now I'm not saying it's gonna go up there, because again, these people have 40 million shares, okay, to dump. So they might be dumping at various stage as it goes up. And so you might be able to capture it. I'm not saying you won't be able to. Right? And then boom, like that. So again, I had to learn the hard way. This is how I know that they're doing that to deceive people. And the only, stock that I kind of believe in is GME. I'm kind of like biased in that sense, so you could say that. But yeah, just be careful if you want to get in here and capture that rise. And again, they could sell right here and then trap people in. That is possible as well. So right here, because I'm sure they think that people think the same way too. So from here, you might be able to capture maybe 15%. And if you want to close the gap, you probably capture about, double X from here. That's it. And so my thought is I wouldn't want to hold this company long term. Maybe it could go up to here even. Right, here's another gap. But just keep in mind that there are people out there who own 40 million shares. They don't tell you who are they selling it to. And if you know anything about Adam Aron, he has been selling it to private equity, okay? And Terra Capital, the likes, and whoever is, in his circle, he never thought retail is in his circle. Retail, retail has saved this company, but he doesn't even give retail the credit for it. He thinks that he thinks that this is by his own doing. So that's just the type of people he is. So, alright guys, that's all I have. And sorry for this long drawn out video. I like this form better when, I don't have to edit myself and all that stuff. So And it's kind of give me a little bit more of a practice too. Alright guys, have a good weekend and goodbye.